And for more on all this, we've got Mitsubishi UFJ Securities Chief Economist Brendan Brown. Hi, Brendan. Thanks for joining us. I'm going to start with a word I don't often start with in my interviews: torseless panic. Is that how you pronounce it?
Yeah.
My German hopefully isn't too bad. Just explain to me, Brendan, why this word is so apt for what's happening right now.
Well, that's a wonderful word put together by the famous US economist Charles Kinderberger when he was writing about manias, panics and crashes, and he describes a phenomenon of torschluss panic, which means door shut panic, everyone trying to get out before the door slams shut. And I'm suggesting there's two main groups now trying to get out before the doors slam shut in the Eurozone. That is, first of all, the people trying to get out of Spain, Portugal, Greece, etc., before they think the bonds may be rescheduled or whatever. And the second big question is whether Germany, once the door shut in the ECB, through which all these floods of money are getting into the rest of the Eurozone to bail them out.
How long before the door shuts at the ECB, do you think?
Well, that's intrinsically a political question. Certainly in Germany, at the highest levels, there's a full realization that what now is keeping the system going is money going out of a back door to all the weak banks in the periphery countries and elsewhere, and that ultimately this depends on the German taxpayer being willing to back up the ECB. So, and this is actually one of the cases before the German Constitutional Court. So when does Germany get its way? It's very difficult to tell, but it does go on to a further issue here that if the EMU is to hold together, German credit rating has to remain supreme. Because if German credit rating begins to suffer and people look at Germany in some doubt, then there's nothing holding EMU together at all.
It sounds like we're in a bit of a catch-22 situation. I mean, what's the end game of this?
I would see the end game as a division where the periphery perhaps split off or perhaps take serious restructuring measures on their debt and banking systems.
Not split out of the euro.
Whether one or two split out of the euro, I think that's impossible to predict. But, but I think it would
just restructure their debt.
An actual exit would depend on some sort of almighty banking crisis where funds flee the banking system in one of these periphery zone countries, where the ECB is not ready to come in and flood the system, and in that situation there is no alternative, whether politicians want it or not, but to exit.
I mean, now, Brendan, the markets seem to be saying it's only a matter of time before Portugal asks for aid. Some are saying it should ask for aid just preemptively, just to calm the storm. Is that the sensible course of action?
That's very much the sense that Portugal is virtually certain to go for an EU-IMF deal. And the big question then goes on to Spain.
I mean, that's the big
and one further question I would mention here is that we're talking about the IMF funding here as if it's absolutely secure for all these packages, but now we have a Republican-dominated House in the US with people like Ron Paul who may really question whether the US has any interest in more funds to the IMF to bail out Spain and Portugal when they have enough problems at home.
It's going to be a tricky few months. In the meantime, do bond yields on those periphery nations, do they just continue going up and up and up?
Well, nothing continues in a straight line in markets. It happens in waves. But nonetheless, the tendency is going to be for more and more lack of confidence and higher yields, predicting some sort of eventual explosion and restructuring.
OK, thanks very much, Brendan Brown there, Head of Economic Research at Mitsubishi UFJ.